Introductions to futures. OKEX futures are a crypto derivative product settled in cryptocurrencies. You may open a long position to profit from the rise of a digital asset's price, or open a short position to profit from the decline of a digital asset's price. Perpetual swaps and futures are two of the derivatives offered by OKEX. Each of them can be divided into two types. Coin margin contracts use the underlying asset as margin. USDT margin contracts use USDT as margin. Perpetual swap contracts have no delivery date and never expire, while future contracts have 3 expiry periods to choose from, namely weekly, bi-weekly, and quarterly. A weekly contract expires on the imminent Friday, a bi-weekly contract expires on the next Friday, and a quarterly contract expires on the last Friday of March, June, September, or December. Perpetual swap and futures are very similar, except for the different expiration period. In this video, we will use coin margin futures as example to demonstrate some trading techniques. To start trading, click Trade, and then Futures in the top menu bar. Next to the coin margin future tag, you can select weekly, bi-weekly, or quarterly contract. After selecting the contract type, you can choose the cryptocurrency you wish to trade on the left. If you have no fund in your futures account, you need to click Transfer to transfer funds from other accounts to your future account. You can choose from 2 margin mode, fixed margin or cross margin. In cross margin mode, the margins of all holding positions will be shared. In other words, all assets in your account are taken as your position margin. Whereas in fixed margin mode, only the assets specified for a particular position is used as margin. You can adjust your leverage freely. Take the BTC USD futures as example. You can adjust the leverage between 0.01 times and 100 times. You can choose different fiat currency as your quote currency, such as US dollars and Chinese yuan. Similarly, you can choose either the underlying asset or the contract as your trading unit. Each BTC contract stands for USD 100 worth of BTC or USD 10 worth of other cryptocurrencies such as LTC and ETH for other contracts. On the data bar, you can view your account liquidity, realized profit and loss, RPL, unrealized profit and loss, UPL, margin ratio and maintenance margin ratio, MMR, etc. The biggest number is the latest traded price, and the percentage next to it is its 24 hours change. Below them, you can find the index price and mark price. Down further, there is a chart icon that directs you to a detailed price chart. To view detailed price movements, simply click to open the chart. If you want to trade while monitoring the market, you can enter the full screen mode. On the right, you can choose to open or close a position. We offer a range of order types such as limit, advanced limit, and stop limit, etc. You can also use the best bid offer, BBO, or trade directly from the order book. To open a new position, click Open Long or Open Short. Similarly, to close a position, simply click Close Short or Close Long. To open a position, enter your ideal price and amount. Please note that your price should not exceed the maximum and minimum prices shown below. If your order is filled, it will be shown under the list of open positions. If not, it will be under pending orders. All your future positions can be found under the All Open Position page. Your trading history can be found in past orders, and all your future positions holdings are shown in All Open Positions. In the Open Position page and the All Open Position page, you can find the position size, profit and loss, liquidation price, margin, and average price of your position. Back to the top, there is the realized profit and loss. It represents the profit and losses of your closed positions. Unrealized profit and loss represents the profit and losses of your open positions. Available margins show the margin in your account that can be used for opening new positions. Use margin is the total margin held as position margin and order margin. Generally, order margin refers to the margins locked up until the order you placed is filled. The margin ratio acts as a risk index of your position. When your position margin ratio falls below the maintenance margin ratio, MMR, liquidation fee ratio, forced liquidation will be triggered. That's all for this video. If you have any other questions, check out the Futures Trading Guide or contact our customer support. We're always here to help.